Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, June 27th, 2025. S&P 500 currently sitting at 6182. I'm David Zarling here with dressed to the hilts, Ian McMillan. Some pretty good developments this week for the market to cover, but everybody's wants to. I was going to say it's not Casual Friday for you, is it? You're completely dressed up.
Had my shoes shined.
If only our listeners could see you.
Markets are a black tie
Dress up
affair.
Fridays. Markets are a black tie affair. It makes sense to get dressed up when you reach new all-time highs.
Yeah, that's true. Hey, let's dive into that. New all-time highs for NASDAQ 100. That was Wednesday. And here we are Friday, a couple days later. Still intraday. The new all-time highs for the S&P.
Yeah.
And lots of things before this. Individual stocks, sub-industries hitting new highs as well, but nice to see the major indices.
Yeah, for sure. NASDAQ, S&P, like you talked about, and then the industries or sectors, technology, communication services, industrials, financials not too far behind, not there yet. And then some of your sub-industries like semiconductors with bellwethers like NVIDIA and Taiwan Semiconductors, and then JP Morgan.
That doesn't hurt.
There's a lot here. Does not hurt. And it's an interesting dynamic because individuals haven't been involved or institutions. You're kind of in a little bit of a psychological purgatory here if you haven't been involved.
Yeah, that's tough. The headlines have been, I like to say I get it. I don't. As a technician, I don't. As a trend follower, I don't. Plenty of headlines to go around, even this past weekend, right? And here we are. S&P, never been higher in the history of the index. So now
you can't keep going.
Right? What are you saying? Well, now, I think to your point, it can be really hard to mentally justify buying stocks now. Although this is still not a bad entry point. If you are 100% in cash, historically, it's still not a bad entry point. Buying new highs, not a terrible strategy, because we know more highs usually lead to more new highs. But yeah, I do get 20% drawdown, which takes 25% to get back. You need a 25% rally just to get back. Mm-hmm. And it's been a quick one, 2 months, to your point, right? Or less than April 7th. So about 3 months. We bought one April 7th, April 8th, somewhere around there.
And I'm sure the psychology is too far, too fast. Oh, man.
For sure.
Market's at all-time high. For some, that's like,
there's
a
big account. There's a big account this week, I think, by all regards, someone who's probably, an expert, big former Wall Street jobs, big positions of importance, decision-making at companies that are all household names, big banks, big institutions. Very much he was on the, this is too far, too fast, this is unhealthy, which I don't know what to say. I don't know what to say, especially as these V-bottoms become more and more frequent.
Yeah, they're not new.
I'm not saying that they're easy, but we should mentally be getting more used to V-bottoms, right? And I think the evidence was there. I'm not saying on April 8th, April 9th, April 10th, Dave and I were sitting back and saying, oh, this looks like it's going to be a V-bottom. But the evidence continued to grow. By the time you got to the end of April and into early May, you're still below the 200-day, but it was looking like a V-bottom was more and more likely. If you want to call this, there was a slight correction back in, like this third week of April. But I'd say for all purposes, V bottom-ish.
The bottom near important volume weighted average price levels. You
Yeah.
had a swing breath thrust in April. And then I think this gap that takes place on May 12th, right through the 200-day and through some important levels, really would start the short squeeze. And then they tried shorting it again last week with high put call readings. We talked about large outflows from retail investors, across the investment universe. And then here we are going to new all-time highs. And now you're stuck. If you don't have a process and you're basing everything on emotion, right? You got short because of tariffs. You got short because of Iran. You name it, the narratives we talked about. Then you're forced to close that short. And are you really feeling all that great about getting in at this point? Probably not. And then you talk about your bellwether stocks like NVIDIA, Taiwan Semiconductors, even JP Morgan, new all-time highs. The too far, too fast, I guess. I mean, it could turn into that where we consolidate for a while.
A lot of participation there under the surface. Even taking
and there's
a sector like industrials. New all-time highs, underperform. I mean, still not, it doesn't have a terrible relative chart, but it's definitely taking a hit.
Looks really good underneath the surface. You've got things that are in uptrends, participating, may not be outperforming, but
This is, I wouldn't say it's a mega cap growth fueled rally. Those look good and they are leaders, but there are things too.
Yeah, for sure. And when has it ever been bad when there's overwhelming demand for stocks? New all-time highs.
Especially in the names that move the indexes the most.
And we know that new all-time highs tend to happen in clusters. Heading into this week, we'd only had 3 new all-time highs in the S&P, that happened in January and February. Last year, we had 57 new all-time highs in the S&P 500. You could start stacking.
That's over one a week.
Yeah, you could start stacking some new all-time highs here. And so it just goes to show that not all market environments are the same. And I think it's appropriate to highlight the supporter of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. And so here we have a market environment I think you would call blue skies, right? You've got things at new all-time highs. You mentioned large cap and growth, but there's plenty of other things happening. But I mean, it is interesting to note, though, you look at something like S&P 500 growth versus S&P 500 value. So SPYG versus SPYV, and that relationship's almost on the verge of new all-time highs. And I know you have a favorite ratio that's almost there.
Yeah, growth versus value continues to point towards tech and all that fun stuff we've seen in the last few years. High beta, low vol.
Yeah.
Looking strong, has recovered. I think that's another great risk on indicator. We definitely want to see high beta stocks outperforming low vol stocks.
Well, and I even think, we're fans of momentum. And when you look across the factors, momentum continues to hold relative strength.
Yes.
That's not a bearish characteristic. And here we are heading into July, which is the best month of the year in post-election years, going back 20 years. That's from Ryan Dietrich. So
the best month is July?
Yeah, in the post-election.
Oh, you're supposed to sell in May.
Sell in May and walk away, the old adage. Sometimes.
Not this year.
Not this year. And so we'll see what July looks like. I mean, it's still ahead of us. Can't sit here and predict. But when we look at the data, It's a seasonally strong month in post-election years, which is what we're in, a post-election year, with a pretty strong track record. And Dietrich also highlighted that since 1988, when the S&P has gains for both May and June, the rest of the year rose 15 out of 16 times. So we could see a positive year on our hands by the end of the year. Doesn't have to be gangbusters, but I mean, this would be a good start going into at all-time highs.
Would be a great start. That's a great tailwind to have.
What about underneath the hood? You talked about individual stocks, or maybe you want to touch base on some sub-industries.
Yeah, industrials. We know about aerospace. Definitely a hot one. Lots of ETFs to choose from. Definitely some more niche aerospace stuff outside of your PPAs, XARs, nukes, Shield,
MISL,
missile,
FITE.
ROKT, Final Front. Yeah. So that, and I don't know if that's an aerospace thing. Is it more of a, right? Because the space exploration also been a big theme the last few months. Hasn't gotten as much media time as things like AI, but the whole space exploration thing.
Yeah, like the Kensho Final Frontiers rocket.
Yeah.
We were talking before we hopped on here, the GEV,
GEV.
Vernova. I don't know that that's base or space, but there's just a lot of different pieces here from across a lot of what I would consider, or what many would consider, risk on areas. These aren't areas that you would be talking about if a recession or a market correction were well underway. We'd be talking about staples or utilities or bonds overall. But we're talking about semiconductors, aerospace, industrials, communication services. I mean, these are risk on areas.
They are. You mentioned semiconductors earlier. I think software looks good.
Yeah.
Not to go back to high beta, but a lot of this high beta stuff, like your small mid cappy, your popular names, your Robin Hoods, your Roblox, Palantir's down today, but all this stuff, I mean, the stuff that retail likes. I know you mentioned earlier net sellers over the last recently. I don't know. I can't remember the time frame you used.
Last few weeks.
But this stuff, like your, what is it? CoreWeave. What's the big Rocket Labs, right? So go back to the aerospace, like all these up and coming names. A lot of them have IPO'd in the last 1 to 3 years. But that stuff's working.
Yep. Well,
so it is definitely a risk on environment.
For sure. Financial technology, broker dealers and exchanges looking good.
Dealers. See, and that's the stuff, right? Financials as a whole, kind of blah. Although very close. That is above a relative 200-day. Close to absolute new highs. Might have all-time closing highs today. Maybe not. We'll see right there. But yeah, then you find these pockets like broker dealers, and you said the ticker on that's IAI.
Yep.
Yeah.
Yeah, looking strong. These are all risk on areas. What about like crypto or precious metals or commodities?
So Bitcoin's still pretty flat. Still, that's green today. Kind of struggling with 107. We were green on the week. Still struggling with 107, 108. We had pointed out, I know I did on Twitter. I don't know if we ever brought it up on here. Didn't ever bring it up in a client letter, but the coin and its correlation to a portfolio that's 50% NASDAQ, 50% gold.
Yeah.
So pretty high correlation there. And we've seen Bitcoin trade sideways for a while. Itself, like we said, continues. I mean, we've been trying to get through 107 for about a month now. Since late-ish May, And so what? And we know, and we just talked about Nasdaq's going higher. So what? If I was to make this a math equation and back into it, Nasdaq's going higher, Bitcoin's flat. So what's that mean? The other 50% of the portfolio is likely doing
Well,
probably going down.
Yeah.
The gold piece is probably going down. That's what I would assume. We've seen that. We'll see if it turns into. It's been sideways. Gold's been sideways. It's definitely looking a little lethargic. That's a tough word for me to use considering the run it's been on. Definitely looking like this consolidation might last a while, or maybe we go lower.
Well, it would be pretty healthy for it to consolidate considering the move.
It would be, but I think it might be a headwind for, that feels weird to say, but if you like to use the Nasdaq gold relationship, right? I don't think gold's a headwind for Bitcoin, not in like any literal sense. It's not, there's no gold in Bitcoin, but I do think that relationship tracks pretty well. And so, yeah, I would assume over the intermediate term, gold continues to underperform.
Yeah, for the time being. I mean, it's had a good run.
It has
Good quality consolidation here, but we're back at levels, that on a relative basis to the S&P we haven't seen since March. And I think that goes back to just the behavior of stocks from that point forward. Cooling off of stocks, but then a quick rebound. You're seeing a same inverse relationship there in that ratio of gold versus S&P. And that's happening with a weak trade weighted dollar. And meantime, you're seeing strength out of international currencies like the euro.
Terrible week for the dollar.
Yeah, the British pound. Some pretty strong characteristic for international.
So this means I never understand how these. So we want to be weak dollar means we don't want to go to. Do we want to go to Europe? Do we want to travel right now or no?
I think if you have the euro is gaining strength versus the dollar,
I want to exchange for euros, right?
No, I think it's the opposite.
Okay.
The yen had been in a pretty massive drawdown versus the dollar. So it made sense to go convert your dollars to yen and go to Japan since January of 21. But now travel to Europe looks like it might be getting a little bit more expensive.
You're staying home? Do I need to cancel our family did have a lot of trips planned. Europe is very high. I was high on the bucket list right now.
Sensing some sarcasm there. Yeah.
I guess I'll just stay home with my weak dollar.
I guess.
Okay. I guess we're traveling to the Southeast this summer, boys.
I'm guessing maybe we'll just have an influx of Europeans coming here and vacationing.
Gosh, yeah. Are they going to? Oh, I think we've done a good job convincing them it's terrible over here.
Why go to the Amalfi Coast when you can go to the Golden Coast? I mean, America's pretty awesome. I can't blame them. I can't blame them for coming over here.
Most awesomest.
Yep. Double superlative. Love it.
But interest rates.
Interest rates basically lower, but in a range, like a 10-year yield is still in a range that begins back in September of 2023. And I think that's interesting. That's near the bottom for the last correction, that 21, 22, end of 21, beginning of 22 correction. That correction ends in summer, fall of 23. And wouldn't you know it, that's interest rates have been in sideways since then, which goes back to market inputs. If the cost of money is flat to borrow for credit, it's a stable rate environment. You don't have these large fluctuations where you're, laddering and cycling in, whether it's company debt or cash flow needs that you're taking credit. It's not a bad environment to have a flat rate, whatever that rate is.
I'd say, and there's definitely a pretty broad belief out there that the Fed is going to lower interest rates. I don't know if the charts are really telling us that. Even this latest little correction, 30 years sitting at, we're down from a little over 5 to 4.8. Feels pretty controlled.
Yeah,
I'm not quite buying that the Fed funds rate's going to get lowered. I don't think so. We'll see. But the bond market, I don't think they're quite believing it either.
well, and even the future Fed funds rate, 80% probability of it being at 4.25, 4.5. So I mean, it just goes back to stable rates are not a bad thing. Yes, I understand they're not the rates of a few years ago where you could get, 3 mortgages. Those days are probably gone, but flat rates also fine. Those input costs, keeping them in, and even like triple C credit spreads, an indicator of liquidity, continue to cool off, and that's a good sign for market health. You mentioned a weak dollar, DXY trade weighted dollar is still below 100. I'm going to be interested to see how that plays out in the months ahead, just because there is such strong short positioning on the dollar right now. But all we continue to see is it move lower, and maybe those shorts will stack up and there'll be a sharp move in the dollar here sometime soon.
Dot plots say lower rates.
Dot plots
say we're getting two 25 basis point cuts this year, one next year, one in 2027.
Fascinating. I can't imagine anybody. I don't know why anybody would.
Why did they stop at 2027?
Yeah.
Go out even further. Tell me what's going to happen.
People love predictions. The dot plot. You kidding me? That's your investment process? A dot plot? We're better than that.
What if your investment process was war in the Middle East will make oil prices go up? That was a tough one.
Yep, that didn't happen.
Now we're back down to where the failed break. I mean, there was failed breakout, failed breakdown, and we got back up above 67. Crude futures, light crude futures to be exact.
Yeah, not to be
We're
confused
back down
with
to
heavy
65.
crude. Yep. Well, and isn't it interesting that they moved that quickly up and down? I mean, there's some volatility there for sure, but that the Middle East narrative, many investors, I'm sure, were thinking, oh, I better pile into gold, I better pile into oil, and those have done nothing but cool off. It's 3 weeks. That trade thesis did not work out. But yeah, rates, 10-year yields in a range. You've got your more risk-on type corporate convertibles like ICBT ETF. It's kind of like the convertible bonds for your ARC type stocks. I mean, ICBT's at the highest level we've seen since 2021.
Wow. Yeah.
So that's going out at important levels. If it holds today, not exactly bearish. And like HYG, high yield bonds, highest since 2022. I mentioned triple C credit spreads cooling off. So if you want to check boxes, there's quite a few of them for a bullish market environment. Now,
well, I got 16 of my 17 boxes checked, Dave. I'm just waiting for this last one.
That's right.
And then I feel safe getting involved.
Right. I get it. If it's one of those, when you think about the makeup of some of these indices, Apple being a big piece of the pie for the S&P 500 and the NASDAQ, it's not like Apple's crushing things out there, but as long as it's not going down, it's going to be pretty hard to bring the market down further. But who knows? We could be on here in 2 weeks and we have a false breakout on our hands, and that would be an indicator that, maybe there's an exhaustion in buying. But I mean, when you look at the NASDAQ, you could make an argument that June 24th was a breakaway gap. Wouldn't that be something? If that moved to new highs on a gap, means we see a
lot of people still waiting for this gap to get filled back from, what was that weekend? Because that's how we got above the 200-day. Was that big gap on a Monday? Yeah, May 12th.
Yep, and that was a big clue. The fact that we were at the volume weighted average price. We were at the 200-day. we were at prior resistance, and the fact that we gapped right through that. People might remember an episode back then called Hot Knife Through Butter. That's what that was. And that was information that, okay, to have control of this market. And there's going to be some pretty hurt shorts out there. And that's all we've seen since that point forward. Does it continue? I have no idea. But the more this market moves like this, the more hurt there is for those who have been uninvolved because of narratives or uninvolved because the market's too high. Eventually, the pain takes over and people capitulate. And wouldn't you know it, it's when people capitulate and stop shorting and pile in that's typically when the show is over. So we'll see. You got any big 4th of July plans?
Family, probably try to find a new, we got to find some stuff locally in our new town. You would love Belmont. It's very West Bendish.
Oh, nice.
So I think there'll be a lot of cool local things going on that we will definitely be checking out.
Yeah, maybe a parade, maybe a 4th of July parade.
Yeah, parade, local fireworks show, something good. Probably something out on the lake. I'm sure they'll have some fireworks shows.
You know,
we don't have a boat yet to go out and watch that, but
okay,
we'll find somewhere.
A lot of boat owners leave their keys in there.
Yeah.
I found out a sad and interesting thing. I've been married to my wife for 24 years, and I just found this out the other day.
You just found out it's been 24?
No, but it's just a piece of information I didn't know, and I've been married to her for 24 years, is that she likes fireworks shows, but not when I put them on. She's afraid I'm going to blow myself up.
She wants to enjoy them with you.
Yeah, that's probably it.
She said, I don't want Dave running the back office. I want him out here mingling.
I appreciate that. Put the best construction on that. Because we were passing a fireworks tent, and I'm like, we should pull over and get some fireworks for up north. And she got, I don't like fireworks that much, especially when you do them. And I was like, oh, you don't like my pyrotechnics? What guy doesn't like fireworks? Girls, I can understand. But that might have to be like an opening interview question, or like whether I'm going to be, whether our friendship's going to have a lasting standing is, do you like fireworks? Because my wife likes fireworks, so that's going to be long standing. It's just if I do them. But yeah, you got to do fireworks on the 4th of July.
Have to. Got
to celebrate that independence. Kicking the redcoats out of here. Living in freedom.
Look what they've become over there.
Yeah. Crazy. But anyway, I appreciate you doing this again with me, Ian. I hope you and all our listeners have a wonderful 4th of July. I don't know if we'll have an episode next week. If we don't, obviously we'll be back in 2 weeks, with 4th being next Friday. I hope everyone enjoys that and remembers all the freedoms that we have here. Obviously, I'm very thankful, and I think America is fantastic. So I hope everybody gets to enjoy that.
Yeah, I hope you have a great time with the family.
I will. One of my favorite places on earth. It's going to be great. Well, thanks for doing this with me, Ian. To those listening, please give us a high ranking on your platform of choice. Share it with your friends. It's like putting on a fireworks show when you do that for us. We really appreciate it.
Have a great weekend, everyone.